Palantir is a very controversial company. They are a software company. They are one of the leaders in AI. And over the past month, we see that while VU, the S&P 500, is up about 0.5%, Palantir has crashed over 20%. The past 3 months, we see that VU is up about 1%, Palantir down over 26%. The question is this dip a buying opportunity for Palantir? Should we wait till earnings? They are reporting earnings after the bell today, Monday, February 2nd. But if we zoom out even more to the past 6 months, we see that that gap kind of closes a little bit. So VU is up about 9.5%, Palantir down only 6% in the past half year. If you look at the past year, however, we see that Palantir is catching up quite a bit. Over the past year, if you had invested money into VU, you're up about 16%. Had you invested money into Palantir, you're up over 80%. And over the past 3 years, the S&P 500, nothing to sneeze at, 77.81%. But Palantir, you would be up over 1,800%. That is phenomenal. Just to note, at Interflame Finance, we were buying Palantir when it was $6, $7, $8 per share. We bought a little bit more when it was in the teens and 20s, and we've since stopped. We knew that Palantir had a lot of growth ahead of it. We did not anticipate that growth happening as quickly as it did. The question is, we can see that pullback in Palantir. It did reach an all-time high at about $200. It's pulled back quite a bit. And so the question is this dip a buying opportunity? Should we hold for earnings? Should we pause? Or should we even maybe start trimming our portfolio? Full disclosure, in our Interflame Finance portfolio, we did trim some of our Palantir when it was in the 190s, close to 200, and we were comfortable doing so. And now that it's pulled back, we were happy that we've done so. Question is, do we add to more Palantir positions? Now, Palantir is the very definition of a growth company. According to the Interflame Finance growth metrics and scoring methodology, we have Palantir coming in at a 3. Remember, on this channel, we go between -10 and +10 for scores. -10 is garbage, +10 is perfect, 0 is neutral. So Palantir is coming slightly higher than neutral in the growth category. However, we typically choose companies and look more carefully at companies that score 5 or higher. Why is Palantir coming in at a 3? Well, their PEG ratio is a 3.3. We typically want PEGs to be 2 and under. 1 and under is a fantastic opportunity, potentially. Palantir is well above that at a 3.3. Their forward PE is a 153. But Palantir is a very big growth company. They have a lot of growth ahead of them. They have a lot of growth in their past. And so analysts and investors are expecting the best of the best from Palantir, which is why they're commanding such a high forward PE. They also have very little debt to equity. This is what attracted us to Palantir in 2021, 2022. They basically had no debt on the books, and they continue to have very little debt compared to their equity. Their return on equity is about 20%, return on invested capital, a fantastic 120%. The profit margins could be a little bit better for a SaaS company, that's software as a service company, at 28.1%. We would want that to be in the 30s, 40s, or 50s possibly, but 28.1% really isn't that terrible. Revenue growth over 40%. EPS growth expected for the next 5 years at 55.1% every single year. That will remain to be seen if they can pull that off. They are getting contracts, both private and government contracts, and so they are growing. The question is, can they grow 55.1% every single year for the next 5 years? Their free cash flow yield coming in at just 0.5%. Typically like to see that at 7% or higher, and a 5-year forward PE coming in at a 38. What that means is if you buy Palantir right now at its current prices and you hold it for 5 years, and if they grow 55.1% every single year for the next 5 years, you would be getting Palantir today at a PE ratio of 38 in the future. That's coming more down to reality. That's coming back down to earth relative to their 153 forward PE, but that's still relatively high, and there's a lot of uncertainty and there's a lot of unknowns in the next 5 years. On this channel, we not only score these companies, but we also compute their intrinsic values. And based on the numbers that we're seeing, and using a 40% growth rate every single year for the next 5 years, we are seeing Palantir coming in at $70 per share. The current share price is $147, so that gives us more than a 100% premium on Palantir. So definitely something that we don't want to buy. At those levels, we would buy at $60 or under. That would give us a 15% discount. and we would buy very heavily if Palantir ever got down to 46. Now, there are a lot of people that love Palantir. It's basically a meme stock at this point. There's a lot of fans of that company. This company has made people a lot of money, Interflame Finance portfolios included. However, I don't think this is ever going to get back down to $60 or $46 per share ever. Intrinsically, they are probably worth 70 if they grow 40% every single year for the next 5 years. But I think there's enough people to buy these dips that love this company, that want more stock, that it's probably never going to get down to those levels again. But if it does, that would be a fantastic buying opportunity. Now, if we use a less cautious and more moderate growth rate of 50%, we see the intrinsic value for Palantir coming up to $114. Now, that's a 29% premium right now. So if you are a big Palantir bull and you want to have this in your portfolio, you would be paying a 29% premium if they grow for 50% every single year for the next 5 years. That would mean that you would buy at a 15% discount at $97 or lower. And if Palantir ever got down to $74 per share, you would buy much more heavily if you think that they're going to grow 50% every single year for the next 5 years. Now, if you expect Palantir to grow 55% every single year for the next 5 years, then intrinsically that would make Palantir almost fair priced. So it's currently 147, intrinsically 144. That's a 2% premium. So basically fair price. So this might be the closest to fair price that this company gets in a long time, absent some big shock in the earnings and things crash. You would buy at a 15% discount at $122. And you would buy much more heavily at $94 per share. So if you've gotten anything out of this video, please like and subscribe to the channel. If you subscribe, you can keep coming back and getting notifications for more videos where we look at companies, we look at broad sectors, we score them based on the Interflame Finance scoring methodology, and we also compute intrinsic values. Again, nothing that we say on this channel is financial advice. We are not telling you to buy, hold, or sell anything in your personal portfolios. Always do your own research, always do your own due diligence. Speaking of your own research and running your own numbers, where do we get these intrinsic values from? Well, if you go down to the description of this video, you'll see 4 links to 4 different intrinsic value calculators. There's the PE ratios model, there's the dividend discount model, there's the discounted cash flow model, and there's the Peter Lynch valuation model. Now, what we've done on this channel for Palantir is we looked at the PE ratios model and we've looked at the discounted cash flow model for Palantir. Palantir does not pay a dividend, so there's no point computing the dividend discount model. And the Peter Lynch valuation model is not good for high growth companies such as Palantir. It is incredibly bearish for a company like Palantir. So if you go down to those links in the description, I will show you step by step how to build out these calculators for yourselves. And so you can see exactly how to score and value stocks based on your own research, your own values, and your own numbers. If you agree or disagree with what we do on this channel, you can tell us about it. You can run your own models. You can run valuations of any company that you want to consider for your portfolio. So these are absolutely crucial tools for your investing toolbox. Check out those links in the description below and build out your own intrinsic value calculators. Now you can see here for Palantir, with that 55% growth for the next 5 years, that is how we get our $144 price target intrinsic value for Palantir. If we wanted to be very, very bullish and assume that for the next 5 years, Palantir, for example, would grow 60% every single year, well, then we start to see a margin of safety in the green. That would be a 19.4% margin of safety. That would be an intrinsic value of $182. So these numbers are all across the board, ranging from $70 per share to $182 per share. It's all based on really what we expect the growth to be in the next 5 years for Palantir. Obviously, nobody has a crystal ball. Nobody can predict the future. So that's why intrinsic values are really just more art than science, but there is a science to it in projecting future cash flows, scaling it back, looking at PE ratios, scaling those back as well. Let us know what you think about Palantir. The wonderful thing about the stock market is it's a stock market and you get to choose what you do with your own money. Palantir has courted a lot of controversy in the past couple of years in their practices and the deals that they make. And so if this is a company that you don't want to buy, the beauty is you don't have to buy Palantir. Now, here at Interflame Finance, this is not something that we are going to buy in the near future. We bought Palantir when it was in the single digits, and we've done quite well with it. Given the fact that the expectations for growth are quite lofty, they're sky-high valuations in their PE and their forward PE, and also given the fact that they are a very controversial company, there's a lot of risk inherent into owning Palantir. And so this is something that, while it may be fair priced, while it may be slightly trading at a premium, this is something that we're going to pass on in the near future because there are much better opportunities out there in the market. So I appreciate you watching, appreciate you coming and checking out our Palantir video here. Please feel free to like the video, subscribe to the channel, tell your friends, tell your family, and tell your mother-in-law about the Inner Flame Finance channel. We appreciate having you here, and we'll see you in the next video.